Felix here. Everyone's starting to talk about the commercial real estate crash. Is it real or is it not? Let me tell you what the investment banks are saying. Let me show you what the data is saying. So this is not some doom and gloom video because it gets clicks. This is just a former investment banker and economist sharing with you the data-driven approach. We're going to look at what the numbers say and also how we can make money out of this. So stick around and smash that like button. We're giving away Apple TV's subscriptions to our $800 a year newsletter and much, much more. All you've got to do is comment down below and share this video and you'll automatically enter to our weekly raffle. So what are you waiting for? Goldman Sachs is forecasting a crash indeed. Moody's reported the first quarterly drop in commercial real estate prices in over a decade. First negative quarter in a decade. So how much will prices fall by, you wonder? There's one set of data that is generally perceived as the most accurate portrayal of current market conditions. It's something very sexy. It's called the Green Street Commercial Property Price Index, which suggests trouble ahead. You should also just throw that out at the next party you go to. You'll probably be standing there alone in a minute. Now, it's indicating we might see a 25% year-on-year drop in office property values and a 21% drop in apartment property values. That's pretty significant. If you look at the transaction volume at the same time, so look at the CRE chart of transaction volume, which shows the entire sector is essentially heading for a deep freeze. So put on the mittens and the hats because lending conditions have tightened. What does that mean? Well, banks are not lending because the Fed broke the banking system. And who lends most of the money to commercial real estate? Small and regional banks. And they're more worried about bank runs than lending to people. So they're not really lending to anybody. And I've been actually warning about this for months now. So if you look at some of the videos we put out since March, you might have been a little smarter. So if you haven't watched those, well, you probably haven't subscribed. Like 60% of people who watch these videos don't subscribe. Isn't that shocking? That's another shocking statistic for you. Now, Deutsche Bank, and I'm German, so I'm always a fan, one of the world's worst run banks ever. Deutsche Bank are warning that the Fed is breaking something. And why are they saying that? Because money supply, M2, as economists call it, is falling at the fastest rate since 1930. Now, I couldn't find a chart that goes back all the way to 1930, so let's have a look at this one, which goes back to 1960. And you can see that every time the money supply takes a small dip, we get a recession. The recession are shown in those green bars in the background there. Now, this isn't so much of a dip as the I don't know, you falling down the Grand Canyon kind of thing. You just go, wow, and at some point you hit the ground. That's not something we've seen in our lifetime. So the Fed, this conservative chap, Jay Powell, former investment banker, hedge fund guy, he seems to like to experiment. First, he printed 40% extra US dollars, which no one had ever done before in the space of just over a year, to apparently save us some COVID. And now he's shredding money faster than anybody else ever. He just wants to get into the Guinness Book of Record, I think. Make his nieces and nephews proud. Generally speaking, when money supply drops like this, you get panic, recession, and depressions, and very, very dramatic YouTube thumbnails. Well, that you didn't get those in the 30s, but nowadays you're lucky. And of course, the CRE lending, the commercial real estate lending, as I mentioned, all comes from regional banks who are not lending. So there's a lot of stuff that's feeding it together here that makes this into a pretty unpleasant picture. Now, how can you make money out of this? You say, now this of course isn't financial advice. This is just an example of the sort of thing that one might do. This is one of the more conservative setups that one could possibly do, but of course you could still lose your money. So this is a website called optionswatch.io, which we've developed, which makes it possible for you to essentially set up trades and find things very, very quickly. So Blackstone, for example, a big commercial real estate fund manager. You've got the stock chart here. You can see we're somewhat down over the year, right? We're trading at 117. We're now trading at 83. So you could buy or sell it, right? Generally speaking, that's a 50-50 setup, which I don't like. So say we just did this. It's called a bear call spread. Say we go out into July, because we don't exactly know when the rest of the world realizes the commercial real estate is actually tanking. And then we make this a bit sexier for ourselves. What do I mean by that? Not more profitable, but more probable. So this setup now has this gray line here. That's your break-even line. At $95 and above, you start losing money. Anywhere below $95.59, you make money. And that's pretty good because we're trading at $83. So this stock price could go up by almost $13, which would be, I don't know what, 15, 16% in the wrong direction, and you still make money. So you're wrong and you still make money. How much money do you make if you are right? You make a 13% return by July. And it would take, say, $400 to set it up. And it has, as I say, an 84% chance of making you money. Still lose money in theory, but it has a pretty good probability setup. So these are the kind of trades we do a lot of. We set up very small trades, lots of these. You could do something more aggressive if you wanted to, but I just wanted to show you something that's a bit more conservative. And you can only do this with options, where you can basically say, I think it's going to go down, but if it goes up 15%, I'm still going to make money, right? And that's how I make my returns so nicely and consistently. And if you want to know more about that, you know what to do, don't you? The link is down below. You just go to felixfranz.org/coaching and you do something that feels slightly uncomfortable. You book a call with my team and you ask them a million questions and make them squirm on the phone. That could be quite fun. Why do I say uncomfortable? Because successful people do uncomfortable things every single day. If you don't get out of your comfort zone, you're doing what you're always doing and you're just being run by the programming that's come from years of doing the same things. And that's why things never change. You need to do something every day that feels uncomfortable. And here is a public service for you. Go to felixfranz.org/coaching and give us a ring. If you want to learn from me and a team of former investment bankers, Chicago Board of Options Exchange traders, guys with decades of institutional trading experience. You want to have those as your mentors, myself? You know what to do. Thank you very much for tuning in and watching. I appreciate you, and I hope to see you on the next one.